Hey folks, welcome back to Profit Margins, where we uncover the truth behind banks' claims and provide you with the knowledge to safeguard and grow your wealth. In this eye-opening video, we will expose one of the biggest lies perpetuated by banks, the notion that your money grows in your bank accounts. The reality is quite different. While your money may increase in numbers due to interest, its value, especially in real terms, doesn't keep up with inflation. This means that keeping cash in the bank is actually burning a hole in your pocket. But fear not. We have identified 7 assets that can not only prevent wealth erosion but also help you create intergenerational prosperity. So let's dive right in. First, God's money, gold, silver, and platinum. Money's value lies in its ability to store wealth for the future. However, the increasing practice of governments printing more money to finance their deficits raises concerns about the stability and reliability of fiat currency. That's why financial experts and gurus recommend investing in valuable and scarce assets, such as precious metals. Gold, silver, and platinum have long been considered God's money due to their historical and enduring value. For instance, let's take a look at gold. Prior to the 1950s, you could buy an ounce of gold for a mere $400. Fast forward to 2023, and that same ounce is now priced above $2,000. According to Prime XBT's gold forecasts, experts predict that the price could skyrocket to $10,000 by 2032. That's a staggering 5-fold increase in just 10 years. While cash loses its purchasing power, gold continues to appreciate. And it's not just gold. Other precious metals like silver and platinum also outperform cash in terms of wealth preservation. Now, if you're wondering how to gain exposure to gold without physically buying and storing it, you can turn to gold ETFs, exchange-traded funds. Gold ETFs are highly accessible and affordable investment vehicles that allow you to participate in gold price movements without the need for physical possession. Second, industrial commodities. Apart from precious metals, another asset class that offers protection against wealth erosion is industrial commodities. These commodities possess not only scarcity value but also have practical uses across various industries. Let's take silver as an example. It is a critical component in the production of electronics, medical equipment, and even nuclear reactors. Similarly, metals like cobalt, nickel, and copper have high industrial demand due to their unique properties that cannot be easily replicated by alternative materials. To provide a clearer picture, let's focus on cobalt. Since 2012, its demand has skyrocketed, primarily driven by its crucial role in producing batteries for electric vehicles. Consequently, its price has surged from $20,000 per ton to $40,000 in 2022, a remarkable 100% increase in just 10 years. Investing in stocks of mining companies, mining-focused mutual funds, or derivatives like futures and options are excellent ways to gain exposure to industrial commodities and potentially boost your portfolio during high-demand phases. Third, safe haven currencies. In a world where fiat currencies are no longer backed by physical assets like gold, geopolitical stability plays a vital role in protecting your wealth. The wealthy have long understood this, which is why they often choose to keep their money in Swiss banks. Switzerland boasts one of the world's strongest economic systems and provides a stable geopolitical environment, making the Swiss franc a reliable safe haven asset during times of turmoil and instability. A prime example of this was witnessed during the Eurozone debt crisis in 2009 and the global financial crisis in 2008. Considerable funds flowed from affected countries into Swiss banks, safeguarding wealth from currency depreciation. The Swiss franc also acts as a valuable alternative to the US dollar for international trade. For instance, during the recent Russia-Ukraine crisis, when the US imposed sanctions on Russian energy trade, Russia executed trades in Swiss francs, causing a surge in demand and tremendous appreciation of the Swiss franc against other currencies. In early 2023, one Swiss franc fetched $1.1074 US, multiplying the wealth of Swiss franc holders overnight. Thus, superior currencies such as the Swiss franc, British pound, and Chinese yuan can be excellent stores of value. While opening Swiss bank accounts may not be feasible for everyone, currency ETFs and forex brokers like Forex.com offer smaller investors the opportunity to gain exposure to currencies with as little as $100. Fourth, sovereign guarantee. Have you ever closely examined a dollar bill? You'll find the words, "This note is legal tender for all debts, public and private." Since President Nixon abolished the gold standard in 1971, the US dollar has become legal tender by US law. While no fiat currency is backed by physical assets, they are considered to be supported by the full faith and credit of the government. Investing in sovereign guarantee is a valuable way to safeguard your wealth. Governments rarely default, as it would have severe consequences for the nation as a whole. However, it's essential to choose stable government securities, commonly known as GSECs. with investment-grade credit ratings. To illustrate the importance of global strength, let's recall the sovereign debt crisis in Greece back in 2009. Multiple entities like the IMF, Eurogroup, and ECB had to intervene and bail out the country due to its financial struggles. Therefore, it's crucial to consider a government's overall economic strength when investing in GSECs. In the US, you can invest in treasury bills, notes, and bonds, which offer better returns than traditional bank deposits and are backed by the strength of the US government in the global economy. Small investors can buy treasury securities directly from the government through the Treasury Direct portal or from the secondary market. Fifth, value stocks and mutual funds. While low-risk investments like treasury securities offer stability, they often provide lower returns compared to stocks. However, it's important to note that not all stocks are equally risky. The stock market is broadly divided into two categories: growth stocks and value stocks. Growth stocks, particularly in the technology sector, tend to be riskier due to their association with innovative ideas and technologies that may have a high failure potential. On the other hand, value stocks, such as companies in the industrial metals sector, offer a lower level of risk due to their established demand for the foreseeable future. Investing in value stocks with strong fundamentals can provide steady and stable price appreciation, along with dividends. However, researching the fundamentals of each value stock can be time-consuming and cumbersome for the average investor. This is where dividend-focused mutual funds come into play. Funds like the Vanguard High Dividend Yield Index Fund Admiral shares, with a stable history of paying dividends, provide an ideal and affordable investment option for retail investors seeking stable returns. Sixth, land and real estate. Land and real estate have always been considered valuable assets throughout history. Land, in particular, is a non-depreciating resource and in constant demand for various purposes, including residential, commercial, industrial, and agricultural use. With a growing global population, the demand for land will only continue to rise. Residential homes, office spaces, and commercial properties built on land also act as excellent inflation hedges. To provide some concrete numbers, according to a Bloomberg study, housing prices have tripled between 1992 and 2020, even after accounting for the significant dip during the 2008 housing bubble. Unfortunately, many individuals only consider investing in real estate later in life, typically when they aim to own their own home. However, having exposure to the retail property market is recommended at any age. Contrary to popular belief, gaining real estate exposure doesn't always require a large sum of money or full ownership of properties. Real estate investment trusts, REITs, provide an alternative option. REITs function similarly to mutual funds, allowing investors to own shares in a diversified portfolio of real estate assets. For example, VTR, Ventas Incorporated, one of the most popular REITs in the U.S., invests in healthcare real estate, including senior housing, research facilities, and hospitals. Additionally, borrowing to own rental properties can be a viable strategy, where rental income covers expenses and mortgage payments, while also generating profits. 7th, collectibles. Last, but certainly not least, we have collectibles, a unique asset class that can hold significant value over time. Collectibles include vintage cars, rare art pieces, handcrafted luxury handbags, limited edition watches, and even iconic first editions of books. The value of collectibles tends to appreciate, making them attractive to investors looking for timeless repositories of value. Let's consider vintage cars as an example. While regular cars depreciate the moment they hit the road, vintage cars increase in value over time. A prime example is the 1955 Mercedes-Benz 300 SLR Uhlenhaut Coupe, which was sold in 2022 for a staggering €135 million. Only 2 of these cars were ever produced, making them rare collectibles highly sought after by car connoisseurs. Similarly, rare artworks and unique items have fetched astronomical prices at auctions, proving the enduring value of collectibles. While investing in collectibles may seem out of reach for average investors, online marketplaces like Whatnot offer opportunities to sell rare items, including baseball cards, comic books, and action figures. Furthermore, platforms like Convey and Masterworks allow investors to own fractional shares of high-value collectibles, making it more accessible for those who cannot afford to purchase the entire item. And there you have it, 7 assets that can shield your wealth from erosion and set the stage for intergenerational prosperity. By diversifying your investment portfolio and exploring alternative options beyond traditional banking, you can safeguard your money against the erosive effects of inflation. Remember, relying solely on cash in the bank is no longer a wise strategy. Take action today and secure your financial future. If you found this video insightful, don't forget to give it a thumbs up and subscribe to our channel for more valuable content.